Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the markets in the last 12 hours have been very volatile after US Federal Reserve Jerome Powell confirms the US Central Bank's hawkish policy turn and included that further hikes will be needed to cool inflation off. This, in turn, sent the US dollar rallying over 1.5% from 104 to the highs now at 105.60, with the objective now only 40 points away at 106. If the market can clear 106, then I would say that we are looking at 109 as a potential target for the dollar index, and that will put further stress on many of the currencies as the Australian dollar plummeted nearly 3%. And the market is now posting very much a negative bias with the ADX trending to a bear case. With the level taken now out at 66.60, the market will be looking for the next objective, which is at 65 cents, a key level and the point where the market may actually find a lot of volatile or whipsaw price action, as the trend will be determined in whether we can see a further week of play. And if so, that would put the market very much towards this region, which is around 62 cents, and reassess from there. The euro was also hit heavily after it retreats away from that key point level of 107.0515 and crushes the support levels all the way now to the region of 105.20, a key point and one to be on guard with. There's a fact if we see a break there, then that would give further indication that 103 is on the way for the next call. Looking at the dollar index, if the market does continue, then we will find this level will be crushed. Therefore, looking down towards 104.55 and then 103.90 and reassess from there, as we could even see a stretch down to, as I mentioned, the 103 figure 20 area. As the US dollar ignites, the market is now looking at 137.5 and on towards 138.20, and the objective still around 139 to 142. With the technicals remaining somewhat bullish, I feel any pullback will be limited. Sterling also took a very hard hit overnight. As you can see, the market plummeted through the key level of 119.25 and now reaches its next objective of around 118. I feel that the market is vulnerable to further losses if we see a break of 117.90, as this would expose the region of 116.75.85. We've got a trend that's in a bullish pattern, and the technicals are somewhat married to the negative case. Well, having looking at that top side level, close to around 1,850 to 60 area, the market took a very sharp turn as the dollar rallied, and now back on track to look to the challenge of 1,800 or even lower down to 1,786. The bears are back in play, and I feel that any upside attempts should be limited towards 1,818 to 1,826. Wrapping up with all that, also took a severe hit after plummeting from $81 down to $77 and putting a very severe dent in the trend that has been relatively strong over the last week and a bit. In light of the pattern, we are looking very much to a bear case towards 75.5 and reassess from there, because if that level is taken out, I see little support until 72.50.80. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the day.